Singtel's energy to take charge of new international digital services unit. Singtel's Group CEO, Yuan Kuan Moon, explains that these new opportunities will help support the telco new business priorities following the restructuring over the past 3 years to better focus on new growth in connectivity, digital services and digital infrastructure. Wow, they are doing something, right? Now, we are well positioned to continue executing our Singtel 28 plan, lifting businesses' performance and delivering sustained value to our shareholders, he adds. And if you look at this article over here, it says that Singtel shareholders to get 35% higher dividend after rise in first half of underlying profit. So it seems that the company is doing quite well, but again, we cannot just look at the media. And let's zoom in to the company's 3 financial statements. Right? We will focus on the company's profit and loss statement. Before we continue, just to let you know that myself, Cayden, plus our company, VIA, Value Investing Academy, we are not licensed by MAS. And because of that, right, whatever things that we share in this video is not meant to do any form of suggestion or recommendation to buy or sell any stocks. So remember, our primary intention for all our videos and channel, right, is really to share so that you can increase your level of financial literacy. Yeah, so let's continue with this video. So let's start from revenue, which is the top line. Now, if you look at the Singtel's past 10 years of revenue trend, you realize that it's declining. Yeah, but again, revenue is vanity and profit is sanity. So let's look at Singtel's earnings. So you can see that for the first half of 10 years, it's a bit flat, but subsequently it declines. And then here it becomes a bit unpredictable. So we have no idea where the trend is going to go, right? But we can also further look at another number, right, which is called the net margin. So the net margin follows the trend of the company's net profit, flat in the first half and then subsequently decline, and then here very choppy, we have no idea. So if you look at the company's net margin, the latest one, which is actually 5.63%, which also means that if the company makes a revenue of $100 and then you deduct all the expenses, you end up with a mere $5.63. So the margin is quite thin, right? If you compare to NVIDIA, which is our past video. Now, having said that, if I look at Sheng Siong, latest trailing 12-month net margin, it was 9.93%. So even though these two companies are in different industry, right? But we'll assume that Sheng Siong's margin is to be quite thin because they compete by price. But if I compare these two numbers, it seems like Singtel's net margin is even lower than Sheng Siong. But let's dig further by looking at the next statement, which is the cash flow statement. Now, cash flow statement has 3 components. Let's look at the first component, which is the cash flow from operation. Now, what does this term mean? It simply means that when a company is selling product or services, money comes in. And when the money comes in, the number will be reflected as positive, which also means that for cash flow from operation, minimum, we want to see a stable trend. Now, if not, uptrend will be better. So if you look at this trend, it seems that it's a stable trend in the very beginning, and subsequently it's a downtrend. In other words, the incoming cash into the business is getting lesser and lesser for the past couple of years. Now, having said that, back to this article, Singtel shareholders to get 35% higher dividend after rise in first half of underlying profit. Interestingly, the company is giving more dividend. So let's look at the company's dividend history since 2020. Now, if you look at this graph over here, there are a few points to note. First point is Singtel pays out dividend twice per year for the past few years, except for these few years where you can see there is this row which is special cash dividend. Now, special cash dividend is usually given out when a company sort of outperform their expectations, so they give out more money. Having said that, if I add up all the dividends per year, you can see that over time, do you realize that the dividends payout for shareholders per year, right, is getting higher and higher? So it seems like Singtel is very shareholder friendly. They want to make their shareholders happy, right? Even though the profit is sort of like downtrend and then flattens out. So let's do a quick summary. Number one, the company's revenue is declining for the past 10 years. Profit and net margin, right, for the past 10 years is declining and sort of flattened off in the last 5 years. Cash flow from operation is declining for the past 10 years, and the dividend, interestingly, has been increasing for the past 5 years, which means that they treat the shareholders very well. So on this note, again, I would like to wish Singtel the best, because it seems like the management knows that there are some issues and they are trying to fix it, because there is this Singtel 28 plan. So from an investor perspective, we have to look at the numbers very factually. So I would like to hear from you. Do you think Singtel is a good investment today? So please comment on this video politely and respectfully, and I shall see you in the next video. See you soon. Goodbye.